This is Agriculture Today, and I'm Shelby Varner with the K-State Radio Network. Dan O'Brien, K-State grain economist, and Guy Allen, the senior economist at the IGP Institute, kick off today's show with a two-segment grain market update. Dan and Guy cover the domestic and international market for corn, grain sorghum, soybeans, and wheat. Guy also discusses macroeconomic topics as well as grain market headlines with Dan. Ending the show is K-State meteorologist Chip Redmond with this week's weather recap and forecast. He explains how temperatures are expected to change and if Kansas will see more moisture. That and more is coming up ahead on Agriculture Today. You're tuned in to Agriculture Today, and we start our Friday show with an international and domestic grain market look with K-State grain economist Dan O'Brien and the senior economist at the IGP Institute at K-State, Guy Allen. Dan, Guy, thank you both so much for taking the time to join us today.
Thank you, Shelby.
The WASDE Report came out last week, and as always, wanting to touch on that domestic and international side. And Dan, starting off with you on the domestic side of things with corn.
Well, the big news was the corn yield. The USDA did adjust lower the U.S. corn yield figure it had from 183.8 down to 183.1, down about 60 million bushels. Total supplies ended up being down about 61. Really no other changes in the supply-demand balance sheet other than that. That number did, though, as you took 61 million bushels off of ending stocks. Now we're down to 1.938 billion. Had been just under 2 before. That compares, for context, in the last two marketing years, 22-23, we were at 1.36 billion. Stocks to use at 9.9%. Last year ending August 31st of this year, we were at 1.76 billion bushels, 11.8% stocks to use. And now with these numbers, we're at, again, 1.38 billion bushels ending stocks, 12.9% stocks to use. So I think that when you just want to talk briefly on what the crop production report said, it did show that in the central 3I states, we really led the way in terms of U.S. corn production. You had yields of 213 bushels an acre estimated for November, around November 1st. In Iowa, 218 in Illinois, 209 in Indiana. Actually, Idaho had 207. So now instead of the 3I states, I guess it's the 4I states, Guy. It's just not contiguous, I guess. Pretty good yields elsewhere. 183 in Minnesota, 181 in Wisconsin, 182 in Missouri, 194 in Nebraska, a lot of that irrigated. Of course, we've got dry land and irrigated mixed together. Our average yield for Kansas, 138 bushels an acre. So there's some interesting stuff, quote, if you dig into the details of that report. When you look at the ears per acre times the yield, we had a lot higher than we've been seeing in terms of actual yields relative to number of ears. So we must have had tremendous years. And Guy, from your home area back in Illinois, that's probably what they were reporting to you. How about on the international side, Guy?
Just looking at that, Dan, this is what's making me a bit bullish corn overall. World ending stocks have declined about 2.5 million tons from 332.4 to down to 329. That's about 15 million metric tons less than last year. Corn, that was coarse grains. Corn's dropped 2.4 down to 304. That's 10 million metric tons lower than last year. Non-U.S. corn use has jumped 6 million metric tons up to 916 million metric tons. Now, the USDA did scale back Chinese imports, 3 million metric tons to only 16. It was 19 previously and as high as 23 million in previous years. Even so, I'm optimistic we're going to see good export demand start to come into the market. We have already, particularly from Mexico. Mexican imports have increased 1.2 million metric tons to nearly 25, up 1.5 from last year. They're experiencing quite a bit of dry weather down there still from last year, and Mexico's moved into the number one slot as the largest corn importer, moving China down to number two. Other crops around the world with our competitors, Brazil and Argentina, really no change there at all. Major exporter ending stocks is down to 8 million metric tons versus just under 13 last year. So it's tightening things up, which means these importers are going to have to come to U.S., and I think we're going to see that go up. One other interesting point is South African corn. Exports down there are generally about 2.5 million metric tons. Major drought down there, actually suggesting that South African imports could be as much to 3.5 and 4 million metric tons, which that keeps me pretty optimistic. That whole southern Africa is experiencing quite a bit of dry weather. And if you look at other places around the world, particularly Europe, Eastern Europe, Russia, Ukraine, as well as northern China and Southeast Asia, there's some major dryness there. When you look at that global soil moisture map, and those conditions persist till spring, I think that's going to bring quite a bit of export demand to our markets.
If I could add to and support what you're saying, I know when you calculate the stocks you use for major exporters, now you and I talk about that quite a bit. 2 years ago is at about 7.8%. Last marketing year, about 5.35, about 5.4. This year's calculated at 3.3, and that projection is for way out into the next marketing year with the Brazilian corn crop coming back in at 133.5 million metric tons, down just a little bit, probably because of acreage.
That's a very, very tight number, Dan. And I think price is going to have to ration a bit of that demand going forward on that, or we're going to have to find some alternative grains, which I think we can talk about that when we get to the wheat situation.
So brings up the situations as we sit right now in cash markets for Kansas. What do we anticipate going forward? Well, all the news now will be on the demand side. So that's what we'll be watching, and it would not be out of the realm of possibility to see exports and usage hold up. We shall see, and that continue to whittle away at ending stocks for this projected ending stocks for 24-25. If I can add in on sorghum, really not a lot of changes in the sorghum supply-demand balance sheet other than the U.S. yield was raised a little over 3 bushels per acre. No changes in the export number, still projected to be 220 million, down from about just under 240 this year. Where there was a change was that with the low price, it looks like the USDA is anticipating more feeding of grain sorghum going on, about 50 million bushels. Well, at this time, until China or somebody else comes in and starts to really take out quite a bit of U.S. grain sorghum, well, it'll be priced good to pretty well to feed. I would say on sorghum, though, that prices, Shelby, you and I were looking at last week, we'd seen the cash prices in Hutchinson for sorghum equal to that of corn. So that to me is indicating that, gosh, somebody's probably looking to get grain in hand so they can send it out via export. So why don't we go to soybeans? Would that be okay?
If I can make a couple comments on the sorghum international sorghum situation. With China corn imports down, I would expect sorghum imports to be a little weaker there as well. Also, Argentina and Australia are having some fairly reasonable crops projected. They're being planted now and over the next couple months, and I think that'll compete against our exports a bit into China. So, and I think the need to feed a bit more sorghum domestically, we'll see that premium of sorghum over corn be a little less than maybe what it's been historically.
And moving on to talking about soybeans, Dan, on the domestic side of things.
Not a lot of changes in the balance sheet. That the biggest issue that came into play was that the USDA did come in because of late season drought, other maladies in U.S. crop. We did drop yield per acre down to, well, just about 1.4 bushels an acre, about 1.5 bushels per acre down to 51.7. That took 121 million bushels off of production. We did see a crush whittled down in response to that, and the pace of crush so far down 15 million bushels. Exports projected down to 25 million. Ending stocks were reduced from 550 million bushels down to 470. Still, so look at the last 3 marketing years, So we had 264 million bushels and 6.1% stocks to use 2 marketing years ago. Last year, we climbed to 342 million bushels ending stocks, about 8.3% stocks to use. This year, even with these reductions, we're up to 470 million bushels of ending stocks projected for the 24-25 marketing year, ending August 31st next year, and up to 10.8% stocks to use. Guy, you want to talk internationals?
Yeah, look, what you're seeing in the increased carryover in ending stocks in the U.S. directly impacted by international markets. World ending stocks, although they shaved 3 million tons off of it, it's nearly 20 million tons above last year. South American, Brazilian, Argentina, and Paraguay numbers were basically unchanged, 19 million tons above last year. So effectively, that's that increase in ending stocks, and the U.S. is going to be carrying most of that. China's import demand was left unchanged at 112 million metric tons. That's 3 above last year's 109 million. So, yeah, not a lot of new news there in the soybeans. I guess it was probably neutral for the most part for the marketplace.
It's really going to be interesting to see what happens this spring when farmers decide whether to plant corn or plant soybeans. Generally, soybeans with these prices, for the most part, does a little better job of covering costs. It's not gangbusters profitable, but it's a little better job of covering costs than corn does. But as we've talked about, generally we're a little more pessimistic probably on soybean prices worldwide going into next year than we are for corn. Although the USDA is still pretty pessimistic, but when you look at where earlier this week, where DEES 2025 corn closed at, it's $4.40 on, I think that was on Wednesday, looking at it. And then soybeans, November 25 soybeans at 10.28. So nobody's doing great, but just a little bit of advantage to soybeans on the future side.
We're cutting to a short break now on Agriculture Today, but when we come back, we'll once again be joined by Dan and Guy as we continue our grain market conversation. You're tuned back into Agriculture Today, and we continue our show with K-State grain economist Dan O'Brien and the senior economist at the IGP Institute, Guy Allen. Dan, Guy, as we continue this grain market conversation, wanting to pick it up with talking domestically about wheat.
The supply-demand balance sheet for wheat had just minor changes. The USDA isn't at this time measuring size of crops, so that's all pretty set. Only thing that can change supply is really imports, and that did happen. Well, I guess that's some adjustment in old crop ending stocks and then imports. We did see an increase of about 5 million metric ton of wheat up to 120 million. That on top of 1.97 billion. And this is for the 24-25 market year. That began June 1st of 24. It'll end May 31st of next year. So not a lot of change there. Slight increase because of some industrial surveys, the food and milling sector, a slight increase in wheat usage domestically. No change in exports. I think the big story on wheat is that 2 years ago, we exported 762 million bushels out of the U.S. of wheat overall. Last year, 707. You had international things that Guy, you'll talk on, that affected that. This year, with some of those same areas of the world being impacted, now we're anticipating about 825 million. And out of that, for hard red winter wheat, which is a lot of what we're dealing with in Kansas, we have some other soft red coming in too and others. But hard red winter, we only had 134 million bushels of exports last year. This year, we're projected to be about 220. So anticipate to be a little better situation. Some of that has to do with the Black Sea region.
Yeah, on the international side, look, globally, we're looking at a record world wheat crop production this year. USDA increased it by 0.6 million metric tons, up to just under 795 million metric tons last week. Shaved a bit off of a bit of production. Most of it was unchanged. Ukraine and Russia was steady to just slightly lower. EU production was steady. Exports were left unchanged at 30 million metric tons. That's compared to nearly 38 million metric tons last year. Argentina was shaved 500,000 tons. Exports left steady at 11.5. Australia, down there in the southern hemisphere with Argentina, both starting to bring some harvest off. USDA number was unchanged at 32 million metric tons for Australia, even though the recent attaché number was at 28 and a half. My local contacts down there suggest it's probably going to be closer to the 32 than the 28. Canadian production was left unchanged, and exports were steady at 26 million metric tons. And the key one in this was China's crop, unchanged, 140 million metric tons, but they did lower imports to 11.5. That's versus 12.5 last year. The feeding number for 24-25 was surprisingly brought down to 33 million metric tons compared to 37 million metric tons last year. That left us to leave us with world ending stocks 257.6, just slightly lower than last year. Not too many changes on that, giving us our ending world stocks to use ratio at 32% versus 32 last year. So pretty much unchanged on the wheat. Just one comment going back to our corn comment. I think particularly in the U.S., we're going to see a bit more wheat feeding this next year than last, particularly when we get to new crop. That's when we generally see our biggest wheat feeding numbers at first quarter, July, August, Sep. So
if I can add, well, the wheat feeding situation could work out for sure that way if U.S. exports are not, if they don't hold up to these USDA projections. And in fact, if some of the things that could happen in corn after the first of the year, usage-wise, come in and tighten up stocks more, then wheat's sitting right there. Sorghum might be too. I would add in, Guy, on, again, the number that you like to look at, the stocks to use for major exporters. That's tightening up just like corn is. So you got 2022 23 market, and we are just about 13.8% stocks to use for major exporters. Last year, 11.4. This year, 8.9%. Almost amazingly tight. And of course, the thing that we've been talking about for a while, which is kind of incredulous if we trust the world numbers, that world less China stocks to use, 18.9%. It was 21% 2 years ago, 20 and a half. So that thing keeps tightening up. And so I think that if the market has worries about what could happen in a place like the Black Sea region, some drought, ongoing geopolitical issues, who knows what, then the market's likely to be sensitive in coming months to whatever comes out of that. Now, that probably takes us over into our geopolitical discussion as to what would happen with the new administration about the conflicts over there.
Yeah, a couple macro comments before we move to the geopolitical ones is I think one thing that on wheat, particularly internationally, is just the impact food inflation's having on that, particularly in a lot of those wheat consuming countries. Wheat being a food grain, a lot of these importing countries have seen quite a bit of food inflation. I think we're seeing a bit of drop back in demand because of locally higher prices on that. I haven't quite got that completely figured in there, but it is having an impact. Looking at transportation situation, few changes there. Just quick look at the dry bulk index. Freight's slightly firmer to steady for last month. Index is up at $1,634, which is a little bit firmer, but look, it's been pretty steady. Starting to resolve some issues there at the Panama Canal with a few more transits going through. Starting to see a few dry bulk vessels go through there, but most of it's still container sort of vessels, but it's good to see that. Looking a bit closer to home, though, the biggest impact we're seeing on your local basis at your country elevator. One bit of rain charged the lower Mississippi with a bit of water, so they've increased the drafts. I think it's back up to 12 feet compared to 9.5. Significant drop in barge freight, which is adding value to that river basis. Also, a lot of pressure has come off then the rail car market as we saw the premium for rail transportation come back as well. Part of that's because harvest is wrapped up and has been put away pretty tight, but that should be improving our country elevator basis. And I think we'll continue to see that as we move to the beginning of the new year in 2025. So starting to narrow that spreads up on the board there as well.
Guy, what about for currency?
Since they've announced Trump projected to win the election on the night of the 5th, U.S. dollar index has jumped 3%, jumped about 2% that night. Today we're up about above 106.5. keep in mind that the biggest drivers of that are the euro and the Japanese yen. And I think it's also making, our big importer currencies is having a bigger impact on that. And that's definitely what's hanging over these commodity prices the last few days. And the reason they've been moving a bit lower is that big jump in our foreign exchange, because it's just making U.S. grain a bit more expensive on that.
Dan, Guy, when you guys look at the grain market, what are some headlines you're seeing around it?
An important ag article came out here in the last few days that the title was "The Trump Trade Policy Seen as Wild Card for U.S. Soybean Farmers, Opportunity for Crushers." What do you think of all that?
Well, I think this concern over a trade war and tariffs is being a bit, one, misrepresented and misstated. Trump's been very specific at you utilize tariffs to level the playing field. I think a lot of us fail to realize that there are significant import tariffs, of 65% going into China once you're above the TRQ for corn, for wheat, about 45% or better for animal products such as beef and pork. And that just doesn't seem to be like a level playing field. I think strategically placed tariffs to bring particularly China and other countries that have fairly high import tariffs back to a more level trading field is the place to go. And it's interesting to watch him starting to appoint his cabinet members this week and the people he's putting in there. And we'll see who he puts in there in the U.S. Trade Representative and the Secretary of Ag. But I think, Trump knows how to make a deal. I think he strategically utilizes those. He can definitely level that playing field for agricultural trade. In a tariff situation, if they're strategically placed, it doesn't change the total world demand, say, for corn or soybeans. We're still going to have that same demand. So what you'll see is the profile of U.S. exports may shift and change to other alternative destination. And it's not like we're losing that whole market. It's just a freight spread. We'll still export the same volume of soybeans will hit the world trade or corn will hit the world trade. It'll just shift to an alternative destination, say to Europe, North Africa. And that's not an absolute loss of market. That is just a change in the underlying freight spread. Now that's likely to hurt us a bit, but it's a few dollars a ton. And a lot of the analysis I've seen, they've done the calculation, we'll lose all of the Chinese market or we'll lose all of this particular market. Well, the U.S. may lose that destination, but it will shift to an alternative destination. And when we had that 4 years ago, 6 years ago, I was a bit surprised how long it took the export market. We saw the price drop, and it took them about 60, 90 days to figure that freight spread shift out. I think the trade's a lot more attuned to those potential threats and issues, and I think those spreads and those alternative markets, they've got established relationships there now, and that'll happen very, very quickly.
Dan, Guy, I appreciate you both taking the time to join us today.
Thank you, Shelby.
Thank you.
That was K-State grain economist Dan O'Brien and the senior economist at the IGP Institute, Guy Allen. We're cutting to a short break now on Agriculture Today, but we'll be right back. You're tuned in to Agriculture Today, and we conclude our Friday show with a weather update with K-State meteorologist Chip Redmond. Chip, thanks for joining us today.
Yeah, thanks for having me.
Chip, this past week, did parts of Kansas see some precipitation?
Some precipitation is probably putting it a little lightly. A lot of rainfall was received in several parts of the state and over the last week through multiple rain events. We had an event over the weekend, and then we had another one come through midweek this week that had some thunderstorms and even some small hail with it. So a lot of rainfall. In fact, when we look at just the total precipitation for the last 7 days, most of Kansas saw at least an inch to an inch and a half. And then southwest Kansas was the target area, Meade County, Clark County. They got up to 4 inches of rain over the last 7 days. An incredible event that we look at those areas like Clark and Meade, where they only average a quarter of an inch of rain a week right now. And so that is above normal precipitation for November and really the whole season, and offset a lot of big departure from normal with that recent dry conditions we've seen in that region. So a really beneficial rain. It didn't rain heavy at a lot of places. We did see some areas of isolated heavy rain, but a lot of moderate to light rain that soaked in the ground and did a wonderful job of helping replenish the soil moisture profiles. I know driving around central Kansas this week, I saw wheat was vibrant and green, and everyone that dusted it in, it's emerged now, and it looks really sharp. It looks good. So definitely some beneficial rains. And as a result, we saw improvements in the drought monitor as well. In fact, last week we had 1.5% of the state that was drought-free. This week, we now have over 26% of the state that's now drought-free. That's a huge increase in improvements, and we eliminated the extreme drought. We eliminated almost all of the severe drought. There's only 3% of the state still in severe drought. We've done a good job of improving it, and hopefully we can keep that ball rolling as we go into the next several weeks.
With this precipitation we saw, what temperatures did we see, and will we see them continued when we look into the forecast?
Yeah, so with this moisture, we've had a lot of tropical moisture, and in every storm system that moved through, we had cooler temperatures, but we would still be very warm when we look at normals. Our average temperature should be in the 50s with average lows at or around the freezing mark, and we're just not getting anywhere close to that. Obviously, we've had a couple of days where they got somewhat close to the overnight lows, but we've been warmer than normal. And finally, we're going to see another storm system come through. A pattern-changing storm system is going to come through the region on Sunday into Monday. A big system going to have significant impacts, especially later in the week as it moves to the east. That is going to tap into really our first taste of true cold air from the north, and it's going to bring it southward. And we're going to see much colder temperatures by the middle of next week and really continuing into December. And that pattern change with that shifting the colder weather means that we're going to have more of a northerly flow, northwest flow. That's a much drier flow. So we will see precipitation chances really fall off after the storm system. And I say after the storm system, Sunday and Monday, we have the potential for 1 to 2 inches of rainfall widespread across almost the entire state again. So we're looking for potential of a near or at near record wettest November for Kansas. And we're not even done with the month yet. We're only barely halfway through the month. So another chance of precipitation, but after that, things start to dry out as we finally get some cold air that changes that pattern. We still have active hurricane, tropical storm in the Gulf, and that's expected to linger around, but this system is also going to take that off to the east and pretty much cut off tropical formation in the Gulf, and that should help really eliminate our tropical moisture and keep us drier as we go into December.
Chip, I appreciate you taking the time to join us today and give us our weather update.
Yep, thanks for having me.
That was K-State meteorologist Chip Redmond. That's all we have for you this week on Agriculture Today, but we'll be back with more for you on Monday.